Hi everyone, welcome to the channel. Today our focus is on the company Toll Brothers, ticker TOL. Now this is a company I've owned for about 2 years now, and the stock is up almost 100% over the past year alone, and I recently began buying more shares. In this video, we'll look at Toll Brothers financials, perform a stock valuation, and at the end of the video, we'll look at my previous computer modeling for the company and perform an update forecast for the next 52-week stock movement. But since this is a company I've owned, we'll look at my purchases into the stock and my portfolio's performance first. So let's jump right into it. Up at the top here, you can see my initial purchases into Toll Brothers back in April of 2022 at just under $47 a share. And now the current stock price is trading around 113, maybe $114. So that's a gain of just over 145%. Well, if I put my money in the S&P 500 index on that day, we can see my gain would have been just under 14%. So Toll Brothers has paid off very nicely since these initial purchases. And you can see down below, I bought in again very recently, and it's all based on my recent valuation at $111.50, and then again on the 29th at $113.67. So my current cost basis right now is $63.54. And down below, you can see the overall summary of the investment. So I probably have about $13,000 invested, and the current value is $22,354. So here's the portfolio's overall performance. We can see Toll Brothers there all the way on the right-hand side. Another company to point out is PHM. That's Pulte Group. They're another home builder. We can see they're up 145%. And I purchased Toll Brothers and Pulte Group about the same time, and they pretty much had the same performance. They're both in that same home building industry. And Pulte Group is another good company. I did a video on that several months ago, but we're going to do an updated video based on their fiscal year 2023 returns. And really, I've done videos on all these stocks we see here. Another one to point out is Patrick Industries, PATK. They do have a home building industry or home building segment, and they're up 86% since I bought in probably about the same time 2 years ago, though they do other things. But some of these stocks I own, like as I mentioned, for a couple years, while some of the other ones are a little newer, like Google and URI, United Rentals. I've only owned those for several weeks now. But let's move on and look at Toll Brothers financials. So here's Toll Brothers financials, and you can see the summary at the top. Everything's checked off, meaning all the data points are moving in the right direction. So if you're not interested in walking through these, you can jump to the next segment where I do my valuation for the stock. But looking at the first one here, dividends, we can see they started paying dividends back in 2017, going from 24 cents up to 83 cents last year. That's a gain of almost 250%. And I believe management said they're already going to increase the dividend for this year. So companies that pay dividend, I like seeing it growing over time, and Toll Brothers is clearly doing that. So excellent sign there. And then shares, I like seeing shares on the decline, and we can see that's happening here. And actually, over the 10 years, the share count is down just over 40%. Now, a lot of companies buy back shares, but not many of them can buy back this much over a short period of time. If you look at big companies, they may be buying back 1-2% a year, so maybe 10 to 15% over a 10-year period. But we can see here for Toll Brothers down 40%. So great sign there. And this is going to play a key factor into some of these other data points as we're going to see. And we're going to see that right now with revenue. So we can see revenue has been growing. Again, we want to see these data points growing over time. And over the last 10 years, this has grown over 150%. So great to see that. But more importantly now is its revenue per share. Because of these share buybacks, this has grown almost 330%. So we can see the impact that these share buybacks have on some of these data points. Now I'm going to bring over another chart before we move on. You can see the PE chart I just added, and that vertical red line just represents where it's currently trading, which is just below a 9. And now looking at this, we can see it typically has a low PE. It's been as low as 4.55 back in 2022 and almost 17 10 years ago, and currently in that 8 to 9 range. So the reason why I wanted to show this is because this is important, because if a company's buying back shares, we want them buying it back at low prices. And with a low PE, it has a much bigger impact, as we see how these shares have gone down over the last 10 years, down 40%. So just wanted to bring this up just to show how important this is. So if a company can buy back shares at a low PE, it has a good impact on the overall performance for the other data points and the other metrics, especially ones that we're going to be looking at. But let's move on and look at some of the other data points as I've been referring to. Next is net income and earnings per share. And we can see net income has grown over the last 10 years. Yes, they had one or two down years, but overall it's up and it's up over 300%. So that's what we want to see. Net income growing and really all these data points growing. But more impressively is earnings per share, which is up over 570% over the 10 years. And that's because of these share buybacks. And that's why I wanted to bring up that PE ratio and just highlight how they're buying back shares. So the more shares they're able to buy back because the stock price is devalued, the better metrics we're going to see here. I mean, an earnings per share for a well-established company like Toll Brothers up 570% over 10 years. That's a great sign. And then same thing with free cash flow. Free cash flow is up over the last 10 years, 300%. But on that per share basis, it's up 570% as well. So great signs here, and this is what we want to see. Then book value per share growing almost 200% over the last decade. Again, that's what I want to see. All these data points growing over time. Now, return on invested capital and net profit margin. I typically like seeing companies 10% or higher, and we could see return on invested capital. They achieved that for the past couple of years. Even in 2021, it was slightly below that at 9.2. So that's why I'm giving this a check mark because it's heading in the right direction. And same thing for net profit margin. Last couple of years, they have achieved that 10% or higher. In 2021, they're at 9.5. So it's heading in the direction I want to see, 10% or higher. And then long-term debt to free cash flow. Now, I typically like seeing companies 3 or lower. You could see they achieved that in 2023, but there have been times historically where they've been above that. But I'm giving it the check mark because most recently they're below that 2.4, and hopefully moving forward they can get this even lower. So that's why overall I gave all these data points check marks because I believe everything is heading in the right direction. Now, I know housing, home buildings is a cyclical industry, but I think we know that the housing is limited, so I do not see this slowing down, at least for the next 1 to 3 years. I'm still fairly bullish over the short time period, but we'll see further out how I feel. But let's move on and we'll perform the stock valuation. So here's the valuation for Toll Brothers. We see intrinsic value just under $146, and with an 85% margin of safety, brings it to $124. And this is based on a 10% short-term growth rate over the next 10 years with a 10% discount rate and using a 3% long-term growth rate. Now, we can see up here in the top right, the net income CAGR, just under 17% for the last 10 years, while earnings per share CAGR at 23.5%. And as I said, I'm using a 10% short-term growth rate. So I believe I'm being pretty conservative here, using a lower short-term growth rate. And as I mentioned earlier, the stock's currently trading around $113, $114 at a PE under 9. So I think it's undervalued, though it typically trades at a lower PE. I still think it's undervalued. Now, with that, let's just say my 10% short-term growth rate, it's still a little too aggressive. So let's lower that a little bit. Let's bring that down to 8% over the next 10 years and see how it impacts the valuation. With that 8% short-term growth rate, we see intrinsic value drops to $124.43. And with that same 85% margin of safety, just under $106. So even though you don't get as much of a margin of safety, where it's trading at $113, $114, it's still below the intrinsic value. So I just think it's a buying opportunity. That's why I've been buying for the past couple of days. We'll see. I may slow down a little bit just to see if the stock pulls back, but I would like to put some more in. Just don't want to get ahead of myself. As I always think there's a chance that the stock can decline, especially it's trading at its all-time high. I typically don't like buying stocks at their all-time high, but I'm just seeing this as an opportunity, and that's why I'm buying in. Now, do keep in mind, as I mentioned earlier, this is a cyclical industry, home builders, but I think we're short on housing. Housing prices are still pretty high. So I think home building is going to be a hot market for another couple of years, maybe for another 1 to 3 years. So I'm still bullish for this industry. And I will be doing an update on my other home builder, Pulte Group, probably in another week or two. So if you're interested in home builders, you may want to subscribe so you can see that one. But let's move on now and we'll look at the computer modeling. First, we'll look at the previous computer modeling to see how it performed, and we'll do an update. Here's the computer modeling for Toll Brothers back in September, and in blue is the M5 rule, in green is random forest, and yellow is just the average of the two methods. Now I'm going to add another line here. It's going to be a red line, which would be the actual stock performance from that September time period until today. With the actual stock price movement in red, we can see it did not track much with the computer modeling methods used, which pretty much showed a flat to a decline in the stock price. And though there was a slight decline in the initial movement of the stock price, but since November, it's been going up, going from about $70 to $114 or so, where we are today. And out of all the modeling I've done for different stocks, this is by far the furthest off. But at least this is not as bad as Google's Gemini results. So I'm looking at that as a positive. But I have made some changes for the updated computer modeling, which we'll get to right now. Here in the computer modeling software, I already ran the analysis using the two methods. And just like we saw a few moments ago, we have the M5 rule, which is shown here. And this data is as of this previous Monday, February 26th. And the far right-hand column is the weekly average stock price for Toll Brothers. And the column right next to it is the weekly average for the S&P 400 index. And the other columns are just various other data points used in the analysis. And we're going to scroll down, take a quick look, because I copied all of these results and pasted it in Excel as it's a little easier to see. And as we scroll down here, we'll see that the outlook prediction for February of next year, you can see it's showing a nice gain, getting up above just $141. But let's move on and we'll look at random forest real quick and then go to Excel. Same thing for random forest. Data is as of this previous Monday, February 26th, and scrolling down 22 weeks, it's actually showing the stock to decline. And I would just add that random forest is typically more bearish on these modelings. But let's go over to Excel and look at everything a little closer. Back in Excel, I already pasted all the results from the computer modeling for the two methods and then taking the average of the two on the far right. And first thing I point out is that vertical red line just represents this previous Monday, February 26th. And we're going to look at everything to the right of that vertical red line because that is the computer modeling prediction. So jumping into it, we got the M5 rule first, which is showing an initial pullback in the stock price, getting as low as around $90, but then recovering and gaining throughout the year and closing out the next 52 weeks at the end of February 2025 at around $141 for a gain of about 26% from today. While random forest is showing the stock price to decline throughout the year. And as I mentioned a few minutes ago, this method typically is more bearish on these models. Not all the time, but usually it is. But it is showing the stock price to fall, getting to around $75 in February 2025, which would be a loss of about negative 35% from today. Then taking the average of the M5 rule and random forest, it's showing the initial decline in the stock price and then recovering just like the M5 rule, but closing out the 52 weeks slightly lower than today at around $107, which would be a loss of about negative 4.5%. To recap, I believe the fair value to buy into Toll Brothers is between $124 and $145, with the lower end taking into account a margin of safety. While the current stock price is trading around $115 to $116, which is near its all-time high. And though I typically don't buy into stocks at or near their all-time high, I've made an exception here, adding to my position. As for the computer modeling, while the model from September did not fall in line with the actual stock movement over the last 6 months, I have made some changes for the updated model with the M5 rule now showing a gain in the stock price over the next 52 weeks, closing out February 2025 just over $141 for a gain of 26%, while random forest is being bearish with the February 2025 outlook in the stock price at around $73 for a loss of minus 35%. Now, I hope you enjoyed this video and gained some useful information. If so, consider subscribing and hope to see you next time. Thanks for watching.